Well, the board of Westpac have extended CEO Peter King's 2-year contract to drive the turnaround after the Royal Commission fallout and, of course, AUSTRAC's $1.3 billion settlement.
Well, on Monday, Westpac reported a 66% fall in profit to just under $2.3 billion, hit by provisions from the recession, but did pay a dividend. I asked Peter King first about the all-important home loans and what made him think he could deliver a systems growth of 3.2% next year.
Well, I think in terms of mortgages, we've had some COVID impacts this year with our operational processes, so we will work through those. And then we've also made the process of applying for a mortgage a bit too hard. And so we've got our new mortgage line of business leaders set up, and they have the top priority of fixing these issues. And we've got about 30 changes in the pipeline to improve our application processes, and we're already seeing early days, but we are seeing our applications lift in the last couple of weeks.
It's interesting because it's obviously been such an important part of the bank's core business. How much do you think that Wagyu and Shiraz case, because now of course responsible lending restrictions have been lifted, but at the time when Westpac was fighting that case, demonstrating it was a responsible lender, do you think part of the problem that the bank finds itself in now is because they've actually put more systems in place when that case was going on?
Oh, I think it had an influence, so we certainly responded to the feedback from the regulator. Now we've stepped back and we're looking at our processes compared to our competitors, and we think there's opportunities to improve them. So it did have an influence on how we responded, but it's also something I think we can fix relatively quickly, and we want to see improvement early next year.
Right, so that is a quick turnaround. Expenses, which was the other area of focus today, it might be slower to pull back because I think both with COVID compliance and of course AUSTRAC, those expenses shot up, I think, more than expectations. How are you going to rein them in?
Well, I think there's two parts to the expenses picture. The first is COVID has put operational demands on the company, so we've lifted resources to meet those operational demands. We've also got more resources in case we have more customers needing to have individual assistance. So we put more people into our assist areas, and we've got ahead of that just in case early next year we have a lot of people who need individual assistance. The other piece is risk management. So some of our reflections from AUSTRAC and our culture governance reviews highlighted we need to do more in risk management, and so we're investing in that area, in financial crime, in risk culture, and in training our people so they understand what we need of them.
This is almost a turnaround story at Westpac now. Now you've signed on for the foreseeable future. You're going to take it all the way through, because just over a year ago you were thinking about retiring, weren't you?
Well, yeah, we've announced today that we do think it'll take a couple of years, and the priorities for the company are fix, simplify, and perform. In the fix bucket, risk management, customer remediation. We need to complete those programs. Simplifying our IT. In the simplify bucket, it's about our portfolio of businesses. So we've got the specialist businesses, and we need to exit some of those businesses, which gives us a simpler portfolio. And then we'll also make changes to products and processes to make it simpler for customers, using data as an example, using technology to make it easier. And then in perform, the big one is mortgages. So we want to see an improvement in mortgage growth. Over time, a lower cost base and better returns for shareholders.
Loan deferrals obviously is a very big story, and they've come down a lot. Even though they've come down, the mortgages, but also on the SME side, you still are holding back in your level of confidence, I notice.
Well, I think I'm very confident on mortgages. So we've seen them come down from a bit over 54 billion to a bit over 16 billion, and we've been tracking very closely whether people make their first repayment. Around 97% have. So mortgages I have seen, it's very good when people are going back onto repayments. In small business, we're just at a different phase. So we're at the end of the 6 months. A lot of people are indicating they're going to repay, but being a cautious banker, we need to see the repayments, and we'll see how we go in the next month on that.
Yeah.
We have had a lot of small businesses not respond to our contacts, whether that's an SMS or an email. Now, we had that in mortgages and they paid. I just want to see that in small business.
Fair enough. So we've also got this March cliff coming when we've got both the JobKeeper but also some of the bank support falling away. What do you think about peak unemployment? Is it really going to be in December at around 8%, or is it going to be in April and higher?
Yeah. Well, on just on the deferrals finishing, they don't actually finish. We move from what I would say is a broadly based deferral arrangement to individual arrangements. So we expect to be speaking to small business and mortgage borrowers next year when the deferrals end on their individual circumstances, and that's why we put more people into our systems.
And do you think JobKeeper will be extended?
So then we go to how does the domestic economic activity and the unwind of support work together? You know, we're all interested in how that works, but that's the offset. If we can manage a transition so we have more domestic activity and less stimulus from the government, that will be the ideal situation.
I must ask you about the buy now, pay later space, because obviously you've sold out of Zip. You're now fully committed with Afterpay. Again, ANZ had a very different view. They don't see the value in these sorts of customers. Is this all about the data? That's question one. And secondly, how far do you think it will be before Afterpay and other buy now, pay laters have to be part of the Credit Act?
Well, in terms of regulation of buy now, pay later, I think that's an open question from a credit perspective and a payments perspective.
Because they're getting closer and closer to banking, aren't they?
Well, I think you need in an economy to have consistent regulation. So, certainly over time, I think they will come closer. We'll see. It's up to the regulators. In terms of the sector, the theme that we're seeing is customers are prepared to do their banking in different ways. So everyone's very focused on the Afterpay transaction, but if I step back, it's about banking as a service. There's more banks than Westpac that are going to offer that service. Some are closer than others, and customers are certainly looking to interact with financial services companies in different ways. So we see that partnerships will play a role in the future in terms of providing financial services. That doesn't say people won't come to the bank. They will. They'll come directly to the bank. But partnerships will also be important in a future industry.
Peter King, thank you very much.
Thanks, Ticky.